Welcome to JAG University. We're breaking down insurance concepts, and making them real talk, right? In layman's terms. So here with Kevin Gazitua, the Kevin Gazitua. Kevin, let's get into it.
All right, class is in session. Elephant in the room, everybody hates insurance.
Everybody except us.
Except us. But, people hate what they don't understand.
I agree with you.
And insurance is really hard to understand because the industry isn't very transparent. And the way deals go down generally are very transparent and are often driven by people whose motivations don't necessarily align with properly insuring anything or protecting any risks or, having the client's best interests in mind in the long run. They want to get deals done and get you out the door.
So it's really expectations.
It's expectations.
And how to manage expectations. And when you mentioned it now, you're buying, let's go into buying a home.
Okay,
right?
yeah.
Making arguably your biggest investment for your family, the biggest asset. And there's times where we have this process where, many times realtors or lenders are kind of quarterbacking deals, and insurance is not even a conversation they're having. It's almost being pushed. I'm not saying ill intentions. It's just the fact that you're not dealing with a licensed agent throughout this process then really manages expectations if there is an issue. And that's where you have some problems.
And that's exactly what it is people don't like insurance because it doesn't live up to their expectations. But where are they getting their expectations? What do they even think they're purchasing when they're buying it? 9 times out of 10, it's not really clear. And people just kind of think, hey, this is my get out of jail for free card if anything bad happens to me.
Bank's requiring it. I have to have it. It's all the same no matter what, right?
Or I have insurance, I'm good. I have an insurance policy. That means I have nothing to worry about.
So just thinking you have it doesn't necessarily mean you have peace of mind. It's kind of a false sense of security.
Yeah. Look at what insurance is. It's a contract, and it's basically saying this company is agreeing to pay X amount of dollars for these amount of situations, subject to these conditions at these locations in the event these things happen. It's very specific. And, that also means that there's certain things that aren't insurable. There are certain things that aren't covered. There's different types of deductibles. There's different types of limitations. And there's kind of a lot going on there. So, not everything can be insured against. Not everything is efficiently insured against. And it's important for people who have assets and who have exposure to certain liabilities to understand where their insurance begins, where it ends,
Sure.
and where they're responsible for managing risk.
And because of that, the narrative is, hey, insurance comes with the bad guys.
Yeah.
Look, we're on the front lines, right? We have to deliver. We're the middle people in this chain, right? In this distribution of insurance. Well, we're representing insurance companies, representing our insureds, but so much of, you get this reputation of, oh, the insurance companies are greedy. Well, you didn't really understand what you were buying and at what price, right? Yeah. So because of the unclear expectations, something bad happens, becomes a kind of like a snowball effect. Yeah. And now this reputational hazard that insurance are the bad guys. The big bad, Wall Street, right? The big bad wolf. They don't care what happened to me. So not knowing and expectations is really the root of all evil.
Yeah. And then at the same time, expectations, bad guys. Okay, well, insurance is a for-profit industry. These aren't some subsidized government program, at least most policies aren't, where this is a for-profit business and the entire point here is to make money.
Which is what everybody does in any business, right?
Yeah.
Like, I don't care what you do. It's funny that you brought that up, but everyone's like, oh, they just want to make money. Well, then what business are you not in to make money?
Yeah. Like if somebody doesn't let you return a t-shirt because it's outside of the return policy,
29 days.
39 days.
Except Nordstrom, they'll take anything back.
Sports Authority used to let you return stuff you didn't even buy there.
And then I think that's why they're out of business.
And,
but it's true.
That's what would happen to insurance companies. They did the same thing. But but that's exactly what it is. It's a for-profit industry. So, you have to know the rules of the game to play it effectively. And there's people who devote their entire lives, like us, to understanding and playing this game and advising clients and guiding people through this world in order to properly insure themselves, to understand what they're purchasing. It's kind of crazy how little thought goes into purchasing insurance from so many people.
It's we deal with it. It is the last thing on the docket through the home buying process.
Yeah.
It's the real, and there's kind of like, again, we should be working together, but I think so much is put, if you look at the whole transaction, the realtor's making a one-time deal, the lender's making a one-time deal, the title company. The only person that's going to be around in 12 months is your insurance agent. And you're not talking to that person, developing a relationship. It's almost, So the three, we'll call the three amigos, right? The people in that really on the forefront controlling the flow, they're, and it's most likely just worrying about closing the deal. So they like to kind of infiltrate or insulate kind of their vendors or their people, control the flow of information. But if you don't talk to your insurance agent before you buy a house, like a live person, not just an email, but an explanation, I mean, I think you're doing yourself a huge disservice.
You're doing yourself a very big disservice because the type of product insurance is it requires a certain amount of baseline knowledge to be able to really apply it to your specific situation, to tailor it to someone's specific needs. You can't just have a super base level understanding of something and then be able to apply it to client A, client B over here, client C over there. It doesn't work that way. You need experience. You need to have worked a lot of deals. You need to have, time in the marketplace. And no realtor, no mortgage broker is going to really be able to effectively go through that process with you. So, and then it's interesting, you mentioned it about, okay, what's the motivation here? One-time deal. Yeah, exactly. It's a one-time deal. Insurance agents make money through residuals. That means we need to keep a client happy year over year over year over year. So our motivation is to make sure that you're not only happy now and get your deal closed, but you're happy next year, that you're happy the year after that.
And you can refer a friend.
That you can refer a friend. When a claim is filed, you have a proper policy that is going to respond, that you understand what's going on. So if a claim is filed and you think you should have coverage, we've already kind of nailed that down and figured it out. So the expectations are very important, but we are really the only party involved in the deal that our biggest interest is keeping you happy in the long run and, making sure nothing comes back to have you upset. And it's a different set of motivations. We're not just deal closed, goodbye.
And we're there to help and provide value. I think there's a little bit of fear if one of our new or potential clients kind of introduce us to their lender, to their realtor, that we're kind of not in the beginning phase, and they're, are we going to be the X factor? Can we get it done? But I mean, it's just thinking about it more and more. The issues that even sometimes, or most of the times that we talk to clients on the second or third year, it's become because those expectations were met up front.
Yeah,
and it's like I didn't know my bank got the insurance for me. Buddy, who's your agent? Where'd it go? I can't find my policy. I got to call the bank. Like it becomes, this needs to be, especially now with the market and the rates being literally out of control, most expensive it's been in my 15-year career. I'm sure everywhere it's got the same, but South Florida even more. Like as you're buying a house, I tell all my clients, call me. Let me give you a quick estimate. Like don't get down that road where now all of a sudden the insurance is a lot more than you thought. And then you got to make some questionable decisions, really cut some coverages. We're having that now that people are calling us, hey, we're closing in a week. And I need my insurance to be X or I won't qualify for the loan. So what does that mean? You got to buy a really high deductible. You got to eliminate any coverage, your contents, loss of use, other structures. Like you're basically buying bare bone stuff just to be able to close. And that's a tough spot because you're almost too far committed. You're going to lose your deposit. And it's a tough spot to be in.
It's tough, exactly. And that's sort of why, the word cheap isn't an insurance friendly word because you're giving something up. That doesn't necessarily mean it's cheaper, more expensive when you're giving something up.
Cheap's a bad word.
Cheap's a bad word. It's competitive, less coverage, more coverage, value, and it's okay when you get it, when you know what you're giving up. But, I can see so many situations where someone comes in with a cheaper quote, and there's certain carriers out there that their cheaper quote is actually adding a preferred contractor endorsement, which necessarily means, hey, if a claim is filed, I'm not going to receive monetary compensation. They're just going to send a repairman to my house.
They're not talking about
That's within their network, like a PPO, or it's a water damage excluded product. So, and that's one of the most likely claims that happen in Miami, South Florida, and older homes is water damage.
90% of the claims.
So yeah, okay, I lowered my premium $500, but now I'm never going to get paid on this policy. And the most likely claim that happens is not going to be covered. That's not cheap. That's an entirely different thing.
And so cheap is relative. There are people, explained correctly, that are willing to take that risk. It's when people can't afford, right? Like you go to saving money to like putting yourself at risk, right? Everyone's risk retention is different, right? How much can they self-insure? But I think empowering and really going back to the expectations and giving people, hey, this is exactly what you're buying. The insurance world will be a better place.
It will be. And so you talk about risk and you talk about risk management. Insurance is one piece of risk management. and your risk management strategy. Every time you have an asset or an operation, you have an overall risk management strategy, whether you know it or not. It might just be completely subconscious in how you're operating, but you're managing risk throughout every aspect of your life every day.
Every day.
On the streets you decide to drive on, the clothes you decide to wear, the people you associate with. The human condition is managing risk. It's how you survive. That's how we've made it this far. It gets that got kind of philosophical, but it's true. So when you're applying that to an asset, you have to think, okay, what are all my risks? What's everything that can happen?
And how can I be proactive, right?
How can I be proactive?
That's what risk management really is like how to be proactive to eliminate or reduce any future loss.
Exactly. So you have, okay, I can insure against certain events. What can you really do against a massive Category 5 hurricane? Probably not much. You're probably going to have to rely on insurance in the event a doomsday storm comes and destroys your asset. That's an effective purchase of insurance to mitigate risk. Okay, but there are other things that can happen that maybe coverage is a little bit too pricey and you feel like you can manage that risk internally. So for example, someone needs to close on a home. To get any options with water damage coverage, they would have to pay $10,000 a year in premium. And they can't afford that. They'll never buy the house. And that's a deal killer for them. All right. But let's say they're able to effectively, have the plumbing inspected, manage all of these exposures.
A water leak detector.
Actively water leak detector, do all of these things. They say, okay, I'll get the water damage excluded product for a year, but I'll take all of these steps to prevent a water damage loss. And I'm aware of this risk should something happen. That's a big difference than somebody saying, hey, I got a cheaper quote, binding it, have no idea that water damage coverage is even a thing that carriers exclude against.
Yeah.
And then they have a claim and they have no coverage and they're like, oh, insurance is a scam.
Because the big bad insurance company.
Yeah, because someone got it for them cheaper.
Right. And that's why the word cheap is such a dangerous place to be. I mean, my experience, anytime someone's been able to take the time to listen and kind of be educated, or at least hear our advice as far as like our professional opinion, it set the tone for years of having a great relationship. It's like no one ever told me that this would happen. I think in anything, whatever you're buying, you want to know what you're buying. It empowers you to make a decision of what you do and what you don't want.
Yeah, right? Yeah. And what's big there too is people aren't going to know that they're not going down the right road until something wrong happens. Because, hey, they're paying a low insurance bill, they're happy, they're living their life, boom, something happens. I've been happy for 5 years, but now I'm finding out I have no coverage, and now I'm pissed. And that's like, hey, because their expectations totally got turned on their head.
Yeah, even the question comes up, hey, I've never put a claim in 5 years or 10 years. And now they're treating me like this. Well, it's bigger than any one specific person. That's what you got to think about too. Like decisions are made based on certain algorithms and different geographic, certain geographical areas, even certain zip codes, right? So sometimes they might close capacity or not renew you, not based on they didn't like you. It's a business decision based on data they have for claims in your area. And they're trying to kind of, actively predict what their threshold is in reinsurance. So it's a little more complicated. It's not really about you.
Yeah, exactly.
It may be about you, your auto, you got a surcharge, but not necessarily about you.
Yeah, I mean, think about it. You're a for-profit company, and you write 100 accounts. All right, for $3,000 each. On one of those accounts, you have to pay $50,000 in a claim. Okay, well now you're totally unprofitable. What you're gonna have to do is gain that money back somehow, somewhere, to remain profitable. And that's an extremely simplified situation because these companies have, of course, a much wider spread of risk. They reinsure against paying out claims, which means they bring in other insurance companies to kind of insure against the reserves that they pay out. Yeah. And it's more complicated, but that same kind of general principle applies, whereas, hey, these fires out west are affecting prices over here
no one talks about that.
Because these companies have to offset the losses they're taking. These companies write insurance everywhere. And even if they don't, their reinsurers might. So rates go up just because bad stuff is happening in general around the world. And, when people sort of understand that, it helps. But this isn't stuff you can learn overnight. And that's why a relationship with your agent is important. And that's why it's important to not only have these conversations year one, but to continually evolve them.
So I want to straight to the point. This is kind of the overall theme. Like, you need to know your agent.
Yeah.
Right? Know your agent's name, know their contact information. Not like, I don't know who my agent is, the bank bought it for me. Or my realtor put me in contact with X. I'm not even sure where their office is at. Like, if that's the case, it's hard enough doing everything right. Certain factors are going to put you in a difficult position with an insurance carrier, but you ever know what you have, who's going to fight for you, who's going to pay your claim, you have zero chance.
Yeah.
I mean, pack it in. Don't show you show up to the fight with a knife and they have a bazooka.
Yeah. And it's like, okay, what are my limitations? What are my deductibles? What are my responsibilities in the event of a claim? What are the timeframes I have? When can I cancel? And there's so many things that are tough to always be aware of. And it's unreasonable for the average person to be able to fully educate themselves on this overnight. And that's why you lean on your agent to help get that done.
Or you can YouTube now.
Or you can watch JAG University.
And then you can call us later.
What I like the example, I use it all the time, of personal trainers. And basically you take two personal trainers. You have one where it's, okay, you show up to the gym, the trainer walks you around the facility, do this, do that, do this. When you get home, eat this. Follow my directions to the T, you'll get ripped. You'll be in awesome shape. You're going to love life. Okay, year and a half goes by, 2 years go by, person's in great shape. They're happy, awesome. They just keep working with this trainer because the guy's great. All right, cool. Second trainer, walk into the gym. They walk you through a workout. They explain the mechanics behind why you're doing what you're doing. They explain the mechanics behind why you're eating what you're eating. They give you a broad level understanding so you can replace stuff you don't necessarily like with similar functioning items that may be a better fit for you, because you're having a higher level conversation. At the end of that year and a half, you may have the same or better results, but you also understand it to the point where you're self-functioning, where you can walk into a gym and design a program. You can help people and you can replicate this stuff. And now, instead of just having this trainer get you out of the pits, they can help bring you to even higher levels because your understanding allows you to implement more complicated, more advanced programs. And the same thing happens with your clients and risk management.
That's great. That's a great analogy.
Yeah. And so the clients we have good relationships with, year one, our conversations start at this level. We're taking over someone else's work probably. We can't talk about a million things. So we hit the main areas. We do the best we can.
It gets overwhelming.
And as we build a relationship over year two, we can improve a little bit more. They retain what we learned in year one. We continuously make improvements. By year 3, 4, 5, this account is functioning at an extremely high level because they've implemented proper risk management. They understand how that affects their ability to procure more competitive terms from more stable markets because they have good track records they've worked on establishing because they get the importance of it. They manage their loss history. They understand, hey, risk management principles. I want to insure against this. I want to retain this risk. A higher deductible makes sense here because of operations there. And all of these conversations in the long run not only save money, they allow the business to run more smoothly. It prevents things from going wrong. And then everybody is better off in the long run. And it's just the ideal scenario. You'll never get there if you just call 20 people every time you renew and say, get it cheaper.
No, and that, by all the things you said, puts you in the position now where the market turns hard and things get really, really difficult. Like, what makes you stand out to an insurance carrier, right? All those little things you've done for years and painting that picture, all the proactive stuff, it's what's going to prevent you from getting, most likely, right? You're going to get an increase, but it's going to prevent you from your insurance program kind of just exploding.
And at this point too, you mentioned a hard market. I mean, if we have a client that's not willing to have these high-level conversations with us on a bigger account or a more complex account or account with some rough history, if we can't get the real information, if we can't dig deep, if we can't have these conversations and really work together, we are not going to be able to build an effective case to get competitive terms from a top market. And now there's less and less markets willing to write business, and it's becoming more and more consolidated into a fewer amount of carriers, and they can only pick and choose the accounts they want to work on. They're going to pick the better file with the better information, with the better insured who is trained, rather than somebody who just wants to beat up insurance companies and pay as little as possible. Sure. It's just, you have to play a certain game. This is a for-profit industry. People have to decide what deals they want to work on or not work on, and you want to be one of those deals they want to work on. Sure. Because that's how you get good pricing. That's how you get good coverage. That's how you're not operating with a sense of panic because you're forced to buy something that isn't adequate because you don't have access to superior products.
Fire me up. I mean, honestly, Kevin, if anyone's not talking to you, they're doing a disservice as a consumer. Fire me up, man.
I mean, it's something I always try to push. And a lot of the realtors that I partner with on deals, since we have these conversations, they get someone new on contract, they tell them to call me. Right. And that's what happened. That's how.
And it comes. You're making also those referral sources, the realtors. You're making them look good in front of their clients. Yeah. It's a win-win.
And you have to be. And it's really making everybody's life easier, and people are scared to hand off their client to somebody, and that's totally okay, because you have to protect your deal, you have to protect your client, and that's why if you're in an industry that works a lot with insurance, it's important for you to develop a relationship with a good agent you trust, so that they can have these conversations with your clients. Just because if you're telling them all willy-nilly go find a quote, all right, now you're really SOL, because you have no ownership on the deal, and then you don't even know this person's properly protecting your asset. And then if something happens down the line, they can say, oh, well, this person let me out to dry and find some guy that didn't help me out.
We're gonna wrap this up, man. I think if you don't know your agent, you know us.
Yeah.
Right? Come home.
Sign up for class.
Sign up for JAG University. So recap lesson 1, JAG University. Know your agent. Talk to your agent. If you don't know your agent, especially during that home buying process, and you're really doing yourself a disservice. Expectations, upfront expectations. And if you don't know your agent, you call us. We're here. Guys, thanks for watching JAG University episode 1 on YouTube. Please subscribe. If you're not, click on the link below and reach out to us. We're available for any questions, concerns.
Okay. Boom. Perfect.